Okay.
All right, we're live. And recording.
Good.
So, I don't have live YouTube channel recording. So, I don't have. Oh, there's a delay there too, huh?
There's quite a lot of latency.
Okay, I tried to set it as low as I could, so hopefully it's smooth. But
can you guys hear me?
Yes.
So my wife just said something about halting trading on Bitcoin. Did I miss something today?
No,
I don't know.
It would be sad if we didn't hear about it and everybody else did.
Back up from what you were
That
talking
was the
about.
futures trading briefly halted after plunging 10%.
Oh, that was yesterday, wasn't it? I think I read that yesterday.
Wednesday. Wait a minute, that was last week. Hold on.
Yeah, that's the CBOE.
Let me look.
SEC just halted trading of the crypto company. This is 7 hours ago. SEC.
Oh yeah. The SEC halted trading of the crypto company because it looks like they made some shady disclosures and had some questionable internal trades and stuff. So I
was aware of them before they got in trouble.
Temporarily turned them off.
Isn't that funny? That's the way rumors get started.
Right.
She just came in. Hey, did you hear that Bitcoin, the SEC halted trading on Bitcoin?
Right.
Right.
Yeah. Well, that's what the common person heard.
Yeah.
That probably played into that dip you saw too. Poloniex is based in Delaware.
Okay, looks like we've been joined by Valerio Vitti. Hello, Valerio.
Hey, Valerio, how's it going?
Ryan, one thing you should know is my face is the only one that's showing up on the Google chat constantly. So I don't know if you can control that from there. I mean, on the YouTube.
Mine is?
Mine.
Oh, yours?
Me, yeah, it hasn't shown you guys at all yet.
Oh, interesting. Well, let's see.
So Valerio, you should be able to type in the chat box there, and we should see that. And if you have any questions or comments, we'll be able to deal with that. We're just waiting for a couple of other people to join before we get into it.
Is it pulling up dynamically now or no?
Yes, it is. I see Ryan's face now.
Cameraman. There we go. Oh, cool. So Valerio, we are learning how to use these tools so we can, better broadcast.
Rob Culkin just joined. Hello, Rob.
Hey, awesome.
So who would like to kick this off?
Well, I suppose I will kick it off briefly with, our basic format here is, and I think everybody here pretty much knows us, but we've got Stephen Farrington with a background in engineering. We've got Roger with a background in law and startup businesses. Who would like to kick this off? Well, I suppose I will kick it off briefly with, our basic format here is, and I think everybody here pretty much knows us, but we've got Stephen Farrington with a background in engineering. We've got Roger with a background in law and startup businesses. Who would like to kick this off? And myself with
All right, we have a feedback loop of audio here where Ryan is hearing himself interrupt himself. So
yeah, it's hard to talk when you start hearing yourself.
We got to figure out what's going on with that.
So anyways, so we would like to talk about a couple of news. talk about maybe a couple different tools and some ICOs and happenings with various cryptocurrencies. So I know Roger, you're very often looking at the various tokens that are popping up. You're in a few that have been fairly active lately. So why don't you kick that off?
Sure. Let's talk about a little token called Bitcoin.
Yeah.
Bitcoin went from $3,000 in September to $20,000 on Sunday night. The market cap for cryptos has increased from $100 billion in September to over $600 billion. It's been a great party. Many investors are up 6 to 10 times in just 6 to 10 times their original investment in just 3 months. So it's a great year. But if you compare it with the stock market, a great year might be maybe up 20%. So Bitcoin's up over 2,000% in 2017. Litecoin's up almost 10,000%. I'm not sure I've ever seen that before in an investment, but 10,000% for 2017. So are these numbers real? Sustainable? What do you guys think? I mean, is this a bubble that's about to burst? Let's start there.
Well, I'll jump right in. I don't think it's a bubble about to burst. I think we get to see lots of little bubbles happen in these markets. But I think somebody I was listening to speak recently said it the best when you say you look at all this volatility and it's not a story about Bitcoin. It's a story about our fiat currencies and our struggling systems. And there's only so much Bitcoin and in many of these cryptocurrencies, they're limited supply. So there's only so much to go around. So there's a simple supply and demand dynamic that influences a price to consistently move upward. Again, that being a reflection of other failures in our systems, completely outside of Bitcoin and cryptocurrencies. What do you think, Stephen?
Well, I think the answer I'm going with is somewhere between a bubble and a complete overhaul of our economic systems and methods of payment. I think that there's a few things that we can't predict how they're going to play out yet. That could cause a major pullbacks, and that has to do with regulations and how the various governments and central banks respond as this grows to a market cap that does start to put their activities at risk or start to influence their activities. Right now, the chief regulator in the U.S. Federal Reserve has said, it's too small to worry about. It may be a bubble, but it's not going to disrupt and cause like a 2008 type crash or something. I think if market cap starts to move to several $1 trillion, people are going to start to get a little nervous and maybe try to do some regulatory things that might induce a collapse. On the other hand, it could also be so I think people are saying bubble, and they're looking at traditional economic indicators like a housing bubble or a tulip bubble, aren't considering a technological aspect of this. And what we're seeing here is a network effect of adoption of a technology where there's geometric or even exponential growth. What we're seeing in the rise of Bitcoin prices, in Litecoin prices and other prices is, from my attempts to model, it looks like a compound exponential growth. So I think there is, some truthful element of exponential growth that's here to stay, and it'll eventually become an S-curve and kind of level out and stabilize. And then superimposed on top of that, maybe a bit of bubble activity. So for me as an investor, the question is, do I want to be in early and ride it through the bubble to wherever it stabilizes to, which is certainly going to be much higher than 3 months ago, as Roger was noting. Or do you want to sit back and wait until you've already missed it? Right?
Well, I think that's a hard problem for people, especially people coming into the market just, now. In September, I'm thinking everything's on sale. You want to collect as much as you want. Everything was going down for 2 months, and it didn't feel very good if you bought in at the end of August and it kept going down right up until November 1st. But now, with it having risen way more than I ever thought it would, and you're starting to see on the news when it hit 20,000, more people are saying, well, is this a bubble? Is Jamie Dimon right that, it's the Bitcoin's a fraud? You have to wonder about those questions. And still, when you meet new people, they're asking, hey, is this real? And I think where I come down is probably somewhere in the middle, is to have a pullback here. We hit 20,000 on Sunday. If it pulls back to 17,000 and it turns around here, that's healthy. That means that we're starting to consolidate, that we're starting to feel good about it. If it just keeps going up, then it feels more speculative to me. And so if we turn around right here and we start heading up again, I'm going to be feeling pretty good. If we start nosediving here, I'm going to say, wow, I believe Bitcoin's, is valueless. Some people say, well, it's worth nothing. Well, I don't think that's true because it's solving a real problem. But is it worth $20,000 today? Should it be more or less? Bitcoin is half of the market cap of the entire crypto sphere. If you look at coinmarketcap.com, it shows that all the cryptos they list there are worth over 600 billion. Well, Bitcoin is half of the total. So, you have to wonder how high can Bitcoin go? But Bitcoin is kind of special. It's limited. It's scarce. It was the first one. It's the most secure code. You got to give it a lot of credit, but it's worth half of the entire market. And then you can go on down the line and you can say, well, look, is Ethereum worth, 40 billion? Oh, thanks for putting that up, Steve. So is Ethereum worth 80 billion? So it's gone up quite a bit. Bitcoin Cash, which was just a fork off of Bitcoin, 47 billion. I mean, talk about coming from nowhere. They did a split August 1st, created Bitcoin Cash. If you take Bitcoin and Bitcoin Cash together, they're worth 350 billion. These are huge numbers. I take some comfort in what you said, Steve, that, hey, when this starts to get to be $1 trillion market cap, then maybe we need to worry. But, I think you have to look at it with a healthy perspective. This is a very volatile market. This thing could dive. It could drop 40, 50, 60%, and it might still be normal. So I think any investors coming into the market have to be prepared for some wild swings. And, my general advice or my general thinking on this or strategy, we don't give financial advice. I'll say that up front. We'll probably say that a lot in these talks. But, I think you have to have a general view of the market. My general view is that, you want to be cautious. You want to invest over time, because if there are wild swings and you put in, and if you're just consistent about participating, it's like they say for traditional investing, dollar cost average. If you put in 1/10 and you put it in 10 installments, then if it wildly swings up or down, you're not hurt that much, because on average, you'll have a reasonable position at a reasonable price. And so I think that's the approach that you take coming into a market that's just had the big moves that we've had, like Bitcoin.
So I'm going to come out as the biggest bull in this circle, I think, because I'm just going to point out, the beautiful thing about this is that we get these prices from a variety of markets. Unlike typical stock prices where that stock price is set in one market, we get these prices for Bitcoin based on global weighted averages. There's all kinds of different ways to calculate them, but the reality is that their price is represented by an actual order book. And so the spread on that order book could change. So just as a sort of theoretical, occurrence would be if the price of Bitcoin does tank, right? That means that the people selling it, sell it market, which buys up the sell orders, or fills up the buy orders on the market, driving the price down. That doesn't necessarily dictate that the sellers drop their price, but they typically do, right? They follow that price downward. The interesting thing about this, though, is that you have to consider how much of the actual Bitcoin in circulation is in supply on those markets versus how much Bitcoin are people locked away with no intention of pulling out, regardless of what they see the day-to-day market happenings go on. So that's why you see these huge swings, because even though somebody may sell on the market and may drive the price down within 24 hours by 20 to 30%, there's still a ton of Bitcoin out there that people are unwilling to sell at that price, which therefore maintains the high value of the currency out there. And so that market will move and adapt, but the reality is that a market is representative of the people who are participating in that market. And so basically, if you've got the majority of Bitcoin held by people who believe it has a higher value, regardless of what that market value is today, it will always come back to meet the supply. Now, people in the market who don't own Bitcoin are unwilling to come in and buy.
I lost your sound.
Oh, that's hot. Am I back?
You're back.
Oh, how far out?
That was sorry guys, that was my error. I was experimenting with mute because people online who are listening are noting that there's feedback, and I was seeing if I could mute myself or mute others to try to alleviate that, and I muted Ryan apparently from here.
Oh.
That's good. Well, maybe we can mute ourselves if we're not talking.
So I wonder if we can get back to Roger. You mentioned that Bitcoin solves a problem, and I guess I would suggest that it solves many problems. And I thought maybe we could each talk about the problems we see it solving and why it's here to stay.
Sure. Why don't you start?
In general.
Yeah,
well,
so what?
I can start. One of the problems I see it solving is that there are over half the planet is unbanked, right? So economies in developing worlds remain stagnant and unable to grow because people can't do basic banking functions like finance, loans, payment, and these people aren't invited into the modern system of banking. Yet cell phones and mobile devices and smartphones are permeating these places where they're leapfrogging, conventional electrical infrastructure, they're leapfrogging landlines. And so these people have access to Bitcoin wallets or other cryptocurrency wallets, and they have access to peer-to-peer exchange, which is what this is really all about, global peer-to-peer transaction settling. And to me, I think that that's the major what's the word I'm looking for, condition that's going to drive most of the adoption. Because once you get a couple billion more people actually banking on cryptocurrencies, I'm not going to say Bitcoin is necessarily going to be the one that's going to capture all that market here. You've got something that's going to be here to stay. And that's really what a lot of the traditional banking industry fears the most, is that it's been a stagnant industry. There hasn't been any innovation in settling funds and doing international payments and that sort of thing in 10, 15 years. I mean, it's lagged way behind internet and cloud computing and smartphones and other infrastructure and communications. And money and pricing is communications of data. It's information. And that industry has not evolved to serve that underserved half of the population of the world. And you already see in places where the central banks of sort of despotic countries like, let's say Venezuela or Zimbabwe are failing and not practicing good monetary policy. People are jumping on Bitcoin and other things in droves to preserve their wealth and put their money in what they consider a safer place.
Well, I think that's the elephant in the room. That's the elephant in the room, which is that the monetary systems today, the fiat currencies around the world, and Venezuela, Zimbabwe, Greece, that's just the tip of the iceberg. I think the real fear or concern people have today is that the U.S., that the European Union, that the Japanese, that the major currencies around the world have been depreciated through quantitative easing and printing money, and that at some point our debt has inflated so great that we're not going to be able to pay it back, and that we keep printing money in order to keep interest rates down, so that the end result is that the fiat currency is going to be undergoing rapid inflation if it's not already. And the question is, how will people be able to transition to a new monetary system? I think Bitcoin and cryptocurrencies came along just at the right time. and it provides a solution. It provides a transition to go from an old monetary system to a new one. And so I agree with you. I think that's one of the key utilities and why it's here to stay.
I think one of the huge intentions of the original release of Bitcoin was the fact that Bitcoin, unlike some of the other options out there now, is still a public ledger. So it's the ability to remove your capital from a system where you don't know what your capital is doing and it's being highly leveraged, and put it into a system where there's some transparency there in terms of, yes, it's pseudo-anonymous, but you know where the currency is, and you can surmise what it's up to, so to speak, and it's leverage. It can be double spent. And so Bitcoin as a currency gives you that store of value, gives you transferability, the ability to meet the coincidence of wants. But what it doesn't do, that money currently does and has done for 500 years, is it does not act as a tool of oppression. It creates a network where there's a combination of incentives and disincentives for people to really play fairly. And our current monetary system is completely driven on essentially a bunch of negotiated oil deals and trade deals that require that the contracts be denominated in US dollars. And that's ultimately the value of our currency as it stands today. Being able to divest yourself from that system, for me, to divest myself from that system is a huge opportunity.
So if the benefit is to allow the system to play fairly, to democratize money, to take it out of the hands of the central banks, what do you guys think about the CME futures trading? Does that change the equation? And that Bitcoin was $20,000 on Sunday night, and today it's 2 days into trading on the COMEX, it's down to 17,000. Is it a coincidence? And is this going to change the democratized benefit of the Bitcoin currency?
I think it's a coincidence.
Oh, go ahead, Ryan. By the way, Ryan, I just want to point out on a technical note here, since this is our first time trying this, we seem to be having some difficulty. My face has been the one broadcast to the folks out there in the audience for like the last 20 minutes. So I don't know if you can. When we started this, it was automatically switching to whomever was speaking.
Well, there may be a way to manually adjust it by clicking on the person who's speaking, whoever's in control. I think Ryan. So we could try that. But otherwise, I think we'll just go with it. We'll learn from this experience, and hopefully those who are listening to the conversation will bear with us. Let me also encourage anyone who is listening to the conversation to write your questions in the chat if you have any. If there are particular questions you want us to address, we've got a whole bunch of things to talk about, but we're certainly open to getting your thoughts and trying to respond to them.
Okay.
Ryan, we lost your sound. Is he on mute again?
Oh, there we go. Stephen, I think I don't think the chats on YouTube come through to the Hangout. So I believe if you have the YouTube channel up, you could monitor the chats if anybody's chatting in.
Yeah, I'm monitoring. Yeah, I haven't seen any questions yet.
Okay, perfect. And I will try to play cameraman a little better. So I was just, my comment to that was that I think that the drawback in Bitcoin price recently has really been coincidental, because the Bitcoin futures are all settled in cash dollars. So they're not actually representative of any big banker buying a bunch of Bitcoin and then selling it on the market, thinking it's going to go down and then buying it back. So there's no actual transactions on the market taking place relative to those contracts. But that doesn't mean that there isn't somebody watching those contracts and potentially trying to influence the results. I think we're too early in the game for them to really be deep enough in it to affect that. And I think more likely this recent altcoin surge with the subsequent pullback and profit taking that occurs there is what's driven the price of Bitcoin down. Because when an altcoin goes up by 100%, somebody sells it to take their profit. They're selling it for Bitcoin, and then they have Bitcoin, which they then either spend somewhere or they transfer into some other currency somewhere so they can liquidate or hold in that way. And so that's where you'll see, especially for where they have large collections of altcoins. when you see that profit cycle take place, you'll see the price dip on Bitcoin typically. But I'd love to hear what you think, Stephen, about where where you think the future is going to lead us.
Well, in terms of the futures trading, I kind of have the same take. There's a decoupling of the, typically futures trading is used to try to manipulate the markets, whether we like it or not. By placing large bets against it, you cause people who are only trading the actual securities to get scared out, and vice versa. I think the fact that there's this decoupling between the settlement of this, I'm not sure if CBOE and CME are working the same way. I was looking down, typing, trying to find an answer to that. But the fact that those futures contracts are all settled in dollars, and they're betting on a currency that is not dollars, it provides a disconnect where I think they're not going to be able to control the price of Bitcoin or any other ones that they do by trading on futures. I had another thought about that, but it lost it.
Well, I definitely think with over 150 exchanges Bitcoin's being traded on, it makes it particularly challenging for anyone who actually wants to try to manipulate the market. And also, you've got to bear in mind that for somebody to try to manipulate the market, they have to own enough Bitcoin or buy enough Bitcoin to have a manipulative influence and then sell that Bitcoin in order to drive the price down, which could work really well or could backfire and just put all their Bitcoin holdings into our hands while they're left holding nothing and the Bitcoin price goes back up. So I look forward to that.
Well, so let me mention one more thing about Bitcoin, then we'll move on to some broader topics.
Sure.
But I saw a statistic in Business Insider magazine. Maybe I could pull that up. 40% of the world's Bitcoins are held by people. 40% of the total number of Bitcoins. And so the concern of the article, and I'm not going to be able to bring it up, my computer's too slow, is that if you've only got 1,000 people that are holding 40% of the world's supply, and these are probably people like the Winklevoss twins and Satoshi that are sitting on these large stashes of Bitcoin, is the concern is that they might just suddenly put them all on the market. Is that likely? Are they going to do that?
But why? Yeah, that's a great point. But again, I think that's where the
if they do that, everybody tries to get out of the market once, and then the price really falls quickly, and then the whole system crashes. Is that a likely scenario?
Right. So I think that's the beauty of the system. That's a highly likely scenario because they would have to have some benefit to doing that, right? So if they decide to move all of that coin, they'd have to have some alternate benefit, right? Otherwise, all they're doing is devaluing their own capital. Now, it may work out that they still end up ahead of where they started. But at the end of the day, when you're talking about people that have billions of dollars in Bitcoin, it really becomes a question of what incentive do they have to harm the system in that way? I mean, they can very easily, fork the coin and make another coin if they want one. They could divest a little bit and invest somewhere else. And that's why there's definitely a valid argument to diversification, why I have more than just Bitcoin, why you have more than just Bitcoin. But it's a pretty hard idea to sell that these individuals, and especially in a coordinated fashion, would sell out their Bitcoin and harm the value of the network in that way. I think it's a lot more likely that they'll hold out and hold out and hold out and have all this capital, and instead of ever spending it at the point where more of the world recognizes the value of a cryptocurrency, they're going to secure that asset and leverage it. They're going to lend against it, or they're going to secure it against some other action and use it as an asset. Again, I think that's the beauty of the network. It really creates a lot of counter incentives to keep everybody, again, playing in that same field.
I agree. I also have faith in people. Go ahead, Steve. What were you going to say?
Just add a little bit to what Ryan was saying. That's the thing. I don't think it's beyond the realm of possibility that the Winklevosses are in it in order to make money, right? And until the time that Bitcoin or whatever other currencies they or Satoshi Nakamoto or anybody else are in become an effective medium of exchange, which I would dare say they are not now. I can't berth my yacht on Necker Island and pay in Bitcoin yet, right? But
pretty close.
There's I wanted to add to the fact that the surveillance that's possible right now, because everybody knows which coins are Satoshis from the original blocks mined. I think people have a pretty good idea which Bitcoin addresses belong to the Winklevoss and some other people, and they're watching. And as soon as they start to cash out, that's going to generate news. And if they were doing that, I mean, forget about anonymous cash out of a huge amount of billions of dollars that might move the markets. Just the fact that as soon as Satoshi Nakamoto, wherever he is, if he even exists, cashes out, 10 or 20 Bitcoin, that's going to be big news. I hope we don't hear that news anytime soon, because if the headline to all the people who rushed in, after the Thanksgiving table conversations, and all the people who are rushing in now and are going to be coming in through the ETFs that are going to hit the market and whatnot. If the headline is Satoshi Nakamoto begins abandoning Bitcoin or something like that, that's a big market psychology play that's going to cause some significant disruption.
To that point though, those folks that have those coins, I think many of them, and this is speculative, but I've seen it in history. Many of them see that as a responsibility, and I've seen cases where large holders have actually broadcast online they're moving Bitcoin from one wallet to another or doing anything like that, because they know that their wallets are potentially being monitored, and they're letting the market know that, hey, I'm just moving it from this wallet to another wallet for security. I'm not selling out my coins, and they're sort of making that statement as a courtesy to prevent some kind of panic sell that might occur. And again,
Ryan, I think you're exactly right. I think you have to have a lot of faith in the people who invested in Bitcoin early, because they're actually the ones that saw the value in the system. These are the people who recognize, they're the early innovators. They recognize that this was a different way of, doing business, of a different way of monetary system, and they believed in the dream. And they're not the ones that are going to sell it out. They're not going to, if they wanted to sell off their stash of coins, they would have been selling them all the way up and saying, it's a joke, I get in early and now I can cash out all the way up. They're not doing that because why? They think it's going to be worth even more, and because they believe in the fundamental value of the system. So I agree.
It's a spiritual brand for most of the early adopters, and they're not going to give up Nike or sell their Harley, or spiritual users are wedded for life to what they invest in. Just a note, we have several questions that have been coming in here. I thought maybe we should answer some of them. First question was from
just a quick note. One of the links I posted was a link to the interview with Novogratz and Branson. So I would guess that Necker Island might actually allow you to negotiate Bitcoin payment for your services.
Okay, I can't go down to Walmart and buy oil to put in my car. Yeah,
fair enough. But you buy a Walmart gift card.
True. Okay, so Rob asked, what is the general sentiment regarding direct comparison between Ethereum and Bitcoin? And do you find Bitcoin's current fees and per transaction problematic? And I think Roger has some thoughts on that. He already typed into a chat that, not knowing that only the three of us can see his answer.
Oh, okay. Well, I'm not in the right page, I guess. But yeah, I think Bitcoin transaction fees are a problem. So there are lots of differences between Bitcoin and Ethereum. The transaction fees is one. But they're like apples and oranges. I mean, and that's the great thing about blockchain. It's going to have a lot of different functions, and we're going to need more than one coin, more than one token, more than one platform. So Ethereum is a platform that's much broader in a sense than Bitcoin, because it provides the ability to create smart contracts. It provides the ability to create other tokens that ride on top of the Ethereum platform. And in that case, in that way, it adds functionality that goes beyond just the currency that Bitcoin has. And so that's some of the positives in terms of the functionality. But on the other hand, Ethereum doesn't have the same limitations in terms of the limited number of coins. It doesn't have the scarcity. And my understanding is that Ethereum continues to create new coins on a perpetual basis. So it's always going to have a little bit of a dilutive effect. But they serve different functions. And I think there's a need for more than one type of cryptocurrency, and they're very different. But specifically to the point of transaction fees, one of the negatives to Bitcoins is it's slower than some of the other currencies. Litecoin's faster than Bitcoin. But also Bitcoin has high transaction fees. And the more people, the higher the price and the more people who are trading it, the more expensive Bitcoin becomes. So the latest
because the more expensive Bitcoin becomes, but actually the more participants in the system means that there might be more transactions occurring and would allow actually lower transaction fees in the long run. Basically, if you have more participants, then there's more volume of fees, and therefore the total block reward would be increased. And a part of the reason why the fees are high right now is also just because there's lack of actual usage of the network for general day-to-day transactions. So the more you have actual usage of the network, the more cumulative fees are available to the network. And so part of the resistance to increasing the block size was that there isn't enough demand in the network to justify it, was one of the arguments. But at a certain point where you can justify some of the adjustments to get larger throughput in the blocks, you can get more transactions through, you can have much smaller transaction fees because there's a lot more transactions going through, and therefore the cumulative value is that much more to the miners. The other interesting thing I always point out too is, we're talking about a $26 trade, but Roger, you might be familiar with this. What would be the cost for me to roll, say, $50,000 into a self-directed IRA?
Well, it's assuming I had $50,000 to roll into an IRA.
Yeah. I mean, the last time I looked into something like IRA percentage, right? It's a 5%
I can't answer that question.
In fact, actually, no, I think it was 12% for that amount, and it was maybe 10% if I went up to 100 grand. So my point to that is obviously, if I roll $100,000 into, one of these accounts where I want to have somebody, manage it or be able to handle creative investments for me, I'm going to spend $10,000 to put my 100,000. So I'm going to have 90,000 5 minutes later. Whereas I could move $100,000 of Bitcoin onto an exchange. It might cost me $26 to get it there. And then I might spend 0.25% on, exchange fees to make some trades and have my assets. And at the end of the day, I've spent $100 in fees and maybe multiplied my 100 grand into $200,000. So it's we can talk about high fees, but it's so funny to talk about that when it's still such a minuscule cost compared to doing business with money in the traditional market. And Bitcoin's a high fee relative to the other 1,000 currencies that have super low fees because they're all trying to compete with Bitcoin. So competition is breeding improvement.
So it's good for competition, but when you're comparing Bitcoin to other, cryptocurrencies you might use, if Bitcoin costs $26, it doesn't make sense to buy a cup of coffee or to, invest $25 if it's going to cost $16 to take that $25 worth of Bitcoin and move it to your wallet. And so those fees are, and those fees are volatile. Every day is a different price. So if it's a high fee, you have to be aware of it so you don't get suddenly hit with a high fee. And you also have to consider.
Let's talk a little bit about what drives that volatility. And so the algorithm that the miners use, or that's used to determine the reward for mining and for well, not necessarily for transaction settlement, because you can broadcast a different transaction.
Let me just actually rewind this for a second, because we got to talk about the importance of a confirmed transaction. So this fee concept really weighs heavily on the industry. But remind me, how long did it take you to send money through the traditional methods, Stephen, to the UK? It was a couple of weeks,
right?
Yeah,
so, okay, my daughter's going to school in the UK, and she opened an account over there. She brought a bank check from her account in the US, deposited it the day she opened her account with Barclays in the UK. It took 8 weeks to clear, during which we had zero visibility into the process or where it was or whether it had been lost or whether it hit the right account. Another occasion, I tried to send her money with a wire transfer. Her banker gave her the wrong SWIFT code. My bank withdrew the money from my accounts, tried to send it to that SWIFT code. The payment failed. Luckily, the SWIFT code that her banker gave her did not correspond to somebody else's account, in which case it would have been lost forever without any recourse, which, by the way, you can do if you put the wrong Bitcoin address in yourself, right? And so it sat in limbo until like 2 weeks later. I said, hey, whatever happened to this payment? I had to call through the bureaucracy of my bank and find out that it had been rejected because of the wrong SWIFT code, but it had stuck somewhere in their books, and they didn't put the money back into my account. They didn't notify me or my daughter that it wasn't transmitted. And so it took, when I corrected the problem, it took 4 days to settle after that. But, you know, this is the world of sending money across international borders. And this is between the United States and the UK, which is pretty much the best pairing of nations and fiat currencies you could have, in terms of maybe with the euro it would be better.
Right.
But,
so my point to all that is that when we talk about transaction fees getting up to $26, that's because somebody doesn't recognize that they don't need their transaction to confirm in 10 minutes.
Well, and I'll add,
the reality is that if I'm sending a bunch of Bitcoin, you know, to my cousin across the world, they have absolutely zero fear that I'm going to double spend that coin. And if they don't need it because they're being kidnapped right now, then they're not going to care if that clears at 3 o'clock in the morning. So the idea that you have to pay a $26 fee isn't really that important, because you can see a broadcast transaction and real confirmations in moments. So the transaction has been done. It's really just a question of, has it been confirmed by the network? And all that high transaction fee equates to is the impatience, the instant gratification desire for us to see those confirmations pop up right away. But the reality is that if you're, from a merchant's perspective, if you're looking at somebody that is paying you and you don't have any real major concern that they're ripping you off, which most people who are in business have learned the 97% rule, which is most people aren't trying to rip you off. They're just trying to get on with their day. Then really we're preventing an anomaly by competing by sending these high fees across the network, when everybody could just relax a little bit and pay $1 fee and wait for it to clear 6 hours later, because who cares? That is 10 times faster than the current system works. Why are we in such a rush?
right. So you're talking about, when we're talking about $26 fees, we're talking about the fee to settle immediately when you're trading on an exchange and you want to see that you just bought something, right?
Yeah, something like that. And even when you're trading on an exchange, actually, those transactions aren't even on the blockchain. Those transactions are in the exchange, the company, right? So it's really, if you're on EtherDelta, right, and you're sending a transaction because you want to make a trade on EtherDelta, a decentralized exchange where all of those transactions are actually blockchain transactions, then yeah, you got to attach gas to every one of those, and you're paying fees. And depending on how you pay is going to affect the time it takes to
right, or if
finalize
you're
that
moving money in or coins in and out of your offline wallet or cold storage onto an exchange or whatever.
And you're
I'll add, you know, the fee for an international wire transfer was $45 plus. You know, when it went through some intermediary, they added 2% to the exchange rate,
right,
which is well more than $26. And in contrast, I signed up for Circle Payments, which is a blockchain-based thing where you can use your debit card or link it to your bank account. And my daughter and I, within 15 minutes of her opening an account and linking it to her debit card in the UK, we sent each other a couple of pounds to test the system, and bang, boom, done. With no fees, by the way, because they're trying to develop their revenue by charging the banks for this added service of being able to settle transactions way faster, hoping that their banks will pick up the fees so that they'll get more consumers. So anyway, but I wanted to move on a little bit about more about the fundamental differences between Bitcoin and Ether, if that's anything that you want to talk about.
Yeah, we can get into that, and I think it's interesting because one of the things we have to always be aware of is that these are open source, well, not all, but many of them are open source software projects, and they're always changing. So Bitcoin is not what it was 9 years ago. It's not what it was 9 years ago. The code is constantly changing. And Ethereum is in that constant state of change as well. And before you get into what the differences are now, I just want to make it a point that if anybody's curious, the guy that founded, that created Ethereum, there's all kinds of recordings you can find him talking about all the ways he wants to upgrade Ethereum. And it's really interesting because some of the key points that he wants to upgrade Ethereum by are to actually make it more like Bitcoin. So that said, go ahead.
So I was just going to point out, when we're talking about different coins and what their value is based on and what their future value might be, Ethereum is the gas, is what they call it or Ether is the gas.
So that's that.
Gas is something separate. Gas is a.
So I was going to point out, when we're talking about different coins and what their value is based on and what their future value might be, Ethereum is the gas, is what they call it
Hey, Stephen, are you there?
Yes, I am. Go ahead.
Okay, I was echo back. So
their value based on what their future value might be.
Oh, gas. So this is a weird concept I've been trying to understand, but gas is a token inside the Ethereum system whose value is adjusted dynamically and is paid for with Ether.
Right.
I actually say it's paid for with Gwei because it's a small amount. But that's another interesting dynamic that actually gives me a little bit of concern about Ether as an investment or as a payment mechanism.
Well, where I was leading is that, and I don't know if this is correct or not, that all these ERC-20 compliant coins are using that as the settlement payment, are they not?
They're
in some form or another.
Yeah. So when you send, if you send an ERC-20 coin, you've got to have some Ether in that wallet to pay for the gas to send your ERC-20 coin.
Right. And what I shared on my screen is sort of all the ERC-20 coins that are out there, and you can cross-reference that to the coin market cap. So in reality, the utility of Ether, Bitcoin is clearly being treated as the new gold. It's a store of value. It's not particularly good medium of exchange, right?
Mm-hmm.
Currently. But Ether, because it powers the network and the blockchain on which not only Ethereum smart contracts and Ether exchanges itself settle, it's powering the blockchain on which all of the ERC-20 coins settle.
Mm-hmm.
It's going to have, no matter which of these business enterprises and these ICOs that have come out floating these coins where they're integral to some kind of a business model, after we go through the year 2000 of the internet, that version applied to what's happening now with exchanges and payments of value. There's going to be a lot of people still standing, and they are still going to be using the Ethereum blockchain technology, and that's going to be powered by Ether. So, people, for instance, like Mike Novogratz is saying, yeah, Bitcoin's a great play right now, but the long-term play is the Ether, right?
Yeah, well, so the thing that's interesting about that is the Ether.
Litecoin.
Sorry, go ahead.
Sorry, I thought it was Litecoin that was the long-term play.
Yeah, well, so the thing about Ether is that every time they do these fundraisers, they've got to spend the Ether to actually do the project, which is a deflationary influence. Ether itself has a deflationary monetary policy where they continue creating more. And then there's also the fact that Ether is not the only smart contract platform out there. You've got Neo, you've got EM, you've got Qtum, you've got Rootstock, Waves, you've got Steam. Steemit is now releasing smart contract token to go with their platform. And so any blockchain can launch a smart contract layer and then copy and paste any Solidity code from an Ethereum contract and paste it into another platform. And then the other thing too about the ICOs is they can be used as strictly a fundraising tool. They can put up a white paper, have no business whatsoever, use the ICO as a fundraising tool, and then port that token to a whole other platform and say, oh, this is the platform we're actually building on. You guys all have your tokens. If you want to swap them, just send them into this smart contract or replace them with replacement tokens, and you're still in the network, no harm, no foul. And now Ethereum suddenly has no value. And so my take on all of that is that ultimately what's going to drive the success of a network, and it's not going to be just Bitcoin, but Bitcoin's going to continue to be a major long-term player, because what we were talking about earlier, you've got these holders of Bitcoin capital, and Bitcoin capital will drive the development of future solutions. So as a smart contract layer launches on Bitcoin, and a fundraiser maybe that's already on Ethereum realizes that they could function on the same platform, over the layer with Bitcoin. And oh, by the way, they're going to be able to tap into this whole network of Bitcoin holders that are vested and interested in promoting that ecosystem. And then the same thing could be run in parallel, and they could tag it onto Litecoin. And you could even have smart contract layers that actually tag to multiple blockchains to provide the settlement or transaction layer. So at the end of the day, Ethereum hasn't really tied anybody to itself, except that lots of enterprise investment has gone into Ethereum. And so lots of corporate money is in the Ethereum market and could be potentially more easily manipulated by that corporate interest than, say, Bitcoin or Litecoin or some of these others.
It's kind of a horse race, as you said, it's all software, right? So any of these platforms can change, and they can add the capability of smart contracts to Litecoin. And in fact, Charlie Lee has talked about that possibility. Not just smart contracts, but this idea of atomic swaps will also add to the functionality of the different coins. So we got a long way to go. And it's going to be a horse race where, this month or this year, it looks like Ethereum is the best platform for smart contracts. And, 6 months from now, maybe an entirely different set. Maybe it's EOS, maybe it's Litecoin. Who knows what's going to come down the line. So you have to be prepared for change.
Hey guys, by the way, Rob Culkin, who is clearly watching what's going on in the world here, who's one of our viewers, just said that Bitcoin Cash just appeared on Coinbase, which is why I have this DAX window open. And he said it was up 44% already since being now available to all the North Americans who can on-ramp and off-ramp through Coinbase. Unfortunately, I'm not getting any charts in my view of it.
That's because it's so popular. Everybody's probably cramming into GDAX to look at it.
Yeah, it's just not happening. But that's big news. I kind of I'm saddened by that news, because I feel like Bitcoin Cash is personally I don't philosophically don't feel it's a great currency. But
how come?
Well, my understanding is it's not an open source code base. It was a fork that was created by people who, miners who wanted to see faster settling times and wanted to see easier rewards by increasing the size of the blocks. And then back in November, we had this big coup where there was, all signs were there was a lot of collusion between big investors and evangelists for Bitcoin Cash, and there was, I think, spreading of what I would consider misinformation through news releases, calling it the true Bitcoin. And that caused a huge exodus or migration of people over to Bitcoin Cash, which caused Bitcoin price to drop tremendously and Bitcoin to be pumped up tremendously. And then after people figured out what was going on, a few days later, it kind of settled back to the normal order of things. But in the midst of all that, there was strong evidence that there was a lot of sort of spam transactions being thrown at the Bitcoin network in order to slow down the settling time, to back up the argument that there was insufficient hash rate to settle things quickly and whatnot. So, my feeling about Bitcoin Cash in general is that the sort of the minds and the players behind it have been doing some, kind of nefarious things to try to pump up its value. And that's why I philosophically am opposed to it.
All right. Well, the truth is, it's still that horse race. Bitcoin Cash could be the real question is who's going to be that second to Bitcoin. If Bitcoin ultimately becomes the store of value, where people with huge sums of money keep their value in Bitcoin. We need an everyday coin that the average person can use, and that's the question: who's going to win that horse race? Is it going to be like?
It's funny you say that. I mean, honestly, I think the everyday coin is ultimately it's whatever ecosystem you choose to participate in, and in the long run, we're going to see fiats become cryptocurrencies because it'd be no different, except that when you put the US dollar on a blockchain and make it a digital currency that has a publicly verifiable monetary policy and issuance policy, and the ledger is auditable, you can still have deflationary fiat currency. It just has a little more accountability attached to it.
What's going to happen if the fiats move to blockchain based? What's going to happen to people who only deal in paper cash now and just don't adopt the technology, either because they're not
same
enough wealth to? The banks still need a way to take money from the poorest members of society, and I think that there's still going to be a strong cash economy no matter what happens.
Well, the same thing's going to happen to them as the people in India. They just don't have money anymore. India don't have cash because they said, "Oh, your cash is no good. Bring it to the bank. And we'll give you a little bit of money for it."
Done.
Yeah.
You may still have to pay your taxes in dollars.
Well, it doesn't have to be paper dollars, though. That's my point. Is U.S. dollars can still be U.S. dollars. It's just a matter of actually putting them on a blockchain. It doesn't change anything about how mismanaged it is or anything like that, but it creates accountability and transparency, which maybe would lead to better management. And ultimately, it actually creates a solution to an age-old banking problem, which is it solves the problem of a run on the banks.
But that
the
is
U.S. government says that a digital currency is legal tender, and this is our U.S. dollar. Then you can go to the bank, and everybody can go to the bank and say, "I want to withdraw my money," and they go, "Great, show me your QR code. You can have all your dollars."
But Ryan, that assumes that the people who have the power to influence and make that decision are interested in transparency and accountability.
Well, right. I mean, what you're really, the real question though becomes, if everybody's willing to participate in these alternate systems, how do you get people willing to continue to participate in this system, right? Every system now has to compete on a free, open, global market. Which economic system, which monetary tool do you choose to participate with? And if we level the playing field that way, which is what Bitcoin is doing, then now the US dollar needs to compete in some way. And its only competition really is going to be in some cases nostalgia, right? It's still familiar, and it's going to allow things to be priced in a way that represents familiarity. And so, the price of things may go up every year, but that's okay because we're used to that. And when we put our money in the savings account, we're not actually going to keep dollars anymore, but we're going to put it into some other type of savings asset. When we go to spend money, we're going to pull out dollars and we're going to go spend our dollars in the street.
So a couple of people have asked about the environmental impacts of mining. I think maybe we should talk about before we.
Yeah, absolutely. I love that conversation. Let me stop whatever I'm sharing here. There we go. Yeah, actually, I believe it was, either there's a Democracy Earth webinar that you can find live on YouTube, and there's also Andreas Antonopoulos talking about this not too long ago. And the cost of mining in terms of energy is certainly, for Bitcoin anyways, is certainly not insignificant. But we really can't even begin to have that conversation if you can't give me a measurable cost of energy for basically our entire infrastructure, right? If you look at our military industrial complex, our government systems, and how we manage and maintain the value of our US dollar and enforce its usage in contracts around the world, that's all a cost of energy. Our US dollar is an energy-based token. It is backed by contracts, mainly fossil fuel energy contracts around the world, and that's what provides its value. And so if we're going to compare the energy usage of the Bitcoin network, we really have to look at the energy usage of our entire military, of all of our actions nationally that create or protect or enforce the value of our US dollar. And then we can have a reasonable comparison of energy usage.
Well, I think even without going that far, we can look at some other sectors. I mean, the financial sector alone.
Mm-hmm.
You know, what does it cost to settle all the Visa transactions? And you know, the claim is that the energy required for their server farms is, you know, way less than the Bitcoin mining, but that's not the full ecosystem.
What about all the employees that drive to the office every day and all their salaries that have to be paid that support this whole system of redundant, you know, paper pushing?
Exactly. And when we look at things that are creating value or redistributing wealth, you know, this recently came up and somebody was comparing the energy usage of Bitcoin mining to, you know, the energy usage of Bulgaria or something. And they said, you know, it exceeds Bulgaria, or it's almost as much as Ireland. And that's not a very instructive comparison, because like you said, we're not comparing it to the consumption of fiat currencies, the cost of the security of enforcing those currencies, things like that. So I just grabbed randomly. I said, well, what uses a lot of energy in the US and what's its market value? And I went and dug out statistics on ground transportation with distillate fuels. So non-gasoline distillate fuels, ground transportation. So we're talking diesel trucks basically in America. And when I did the calculations, you know, that I've got the email I wrote to somebody about it here in front of me. You know, Bitcoin uses 1,800, I'm sorry, ground transportation in the US uses 1,810 terawatt hours per year, all of it being fossil fuel. And that's 56 times more energy consumption than Bitcoin's network at 32.56 terawatt hours per year currently, which, by the way, is powered a lot by hydroelectric. But then when you look at the size of the industry, you know, that's, we're talking about a transactional volume in the sector of US trucking of $676 billion per year. So there's about 2,680 kilowatt hours per dollar of economic activity. Whereas if you look at Bitcoin, with $11.7 billion per day in economic activity, it uses less than a half a kilowatt hour per dollar of economic activity. So if we compare the, you know, the cost, the energy cost per the dollars of economic activity, you know, it's like minuscule.
Right.
We need to be comparing apples to apples, not just big numbers saying, you know, it's the size of Bulgaria, because there's a lot of things the size of Bulgaria.
Right.
With a new industry, I think we've got, you know, some social responsibility, you know, where there are going to be new ways that will make mining and transactions more energy efficient. And I think, you know, the industry has an obligation to, you know, to incent or encourage and support those new, you know, techniques or algorithms that are going to be less energy intensive. And I think that's the direction, you know, we're going to want to head. There's no reason to waste energy. So
I think there's a valid concern still to changing the current mechanism because it is proven to be the most secure, and it's simply you know, it's a matter of Congress, right? It's a political consensus to make a change to that network is a challenge, but also part of the reason you haven't gotten that is because there hasn't really been you know, the best solution really identified yet. But it's also often overlooked the fact that this energy usage has driven two things. One, it has driven the innovation for more energy efficient IC production. The other thing it's done, and I think this is even more important, is it's driven that production into the hands of consumers. For decades now, you know, we've had computers, and we get a little bit better computers every year. They release the computers as quickly as they can mark up the price for them, but not too quickly, right? And so this industry, Bitcoin, between the ASIC chips used by the Bitcoin mining and the GPU chips used by Litecoin and some of the other mining and these various processing units, this industry is driving not only the enhancement of efficiency and development of those chips, but it's also driving those chips onto the market, which are being bought and they're ready for the next upgrade, and they're being bought, and there's buyers out there ready to buy the very next most innovative chip, as opposed to the sellers, the manufacturers going, we've sold as much of this as we can this year. People get really sick of how slow that goes, or software starts to bog that down before we release this next chip. Well, now you've got mining companies that are buying up the entire manufacturing supply of a chip, and they're going, geez, we either got to make more, or we got to come up with a better chip, and we got to get this out here because we're selling them, right? So it's hard to quantify that, but you've really got to consider how much has Bitcoin and cryptocurrency mining driven our global technological advancement in terms of cell phones and microprocessor technology just in the past 9 years of its existence.
I got a new question for you guys. So if Satoshi Nakamoto is a single person, today he would be the world's 50th richest person based on his stash of Bitcoin. How much of the market cap, how much would Bitcoin have to go up in value in order for his stash to make him the #1 richest person in the world? It's a brain teaser. We can come back and figure it out for next time, but
he's there, isn't he? We'll leave it as a brain teaser for next time.
But we're up on an hour. Do we want to keep going, or do we want to keep it to an hour, and we'll schedule another talk? How often are we doing these?
Well, let's do them weekly. I'm trying to just answering some questions via chat right now that came up. One of them was about proof of stake as an idea versus proof of work.
Thank you for monitoring that. Should we talk about closing remarks, or do we have more questions we should answer?
Oh, can you hear me?
I can hear you.
Okay. I was just going to say, if Stephen has a few questions, we could maybe hit a few more before we wrap up and then close it out.
Yeah,
I was going to mention proof of stake.
Yeah, if you guys want to talk about proof of stake while I kind of troll for the other questions.
Sure, yeah. I like proof of stake as a concept. It makes a lot of sense to reduce the cost in terms of energy and keeping the sort of playing field fair. The challenge with proof of stake is that and there's lots of coins that have actually addressed this in the way they've launched, but basically the idea of proof of stake is that you want to have as broad and diverse an initial user base who would have the stake as possible, because the more diverse that user base is, the more reliable and trustworthy it is. The less likely that a group of players can get involved in a way that would influence the market. So proof of stake is great, except if you have 10 people that all know each other, are all going to coordinate, and the ones that have enough to have a stake. But if you have a proof of stake mechanism that allows fairly small barrier to entry, but it's high enough to be a deterrent to damage the system, and the initial release of coins is designed in a way to allow a very decentralized sort of democratic access to the coins, then you can have a broad enough network that you can rely on proof of stake. The challenge there still becomes somebody could go around and basically buy up your stakes and convince people to sort of give up their stake in the game and centralize their control over it. And so proof of stake works kind of until it doesn't work, because there's a capacity in there to sort of negotiate your way into a controlling entity.
But if one of the coins gets taken over by a controlling interest, wouldn't that be a reason for people to just shift to another coin?
Yeah. I mean, that's exactly why Litecoin exists, right? Charlie Lee launched Litecoin on the simple concept that there could be too centralized a controlling interest in Bitcoin, and it just makes sense to have an alternative that everybody could run away and go to another system without having to jump back to the traditional system. They can stay in crypto, and they can, sort of try again. And the reality is that, if you're converting your Bitcoin to Litecoin, it may change, in value a little bit, but it's generally going to be the same dollar value, roughly, given time, and depending on what's going on that's causing that shift. Which brings the point of, is there going to be a one crypto? And there isn't.
Yeah, there's value having multiple cryptos, and I think there are a lot of different use cases, and particularly if they never solve the scalability problem, right? If the network's all bogged down because everybody's jumping in onto one coin, that's the easiest thing is just to have more than one coin, so the networks are not bogged down.
Right. Exactly. Dash actually, I haven't read enough about it, but I know Dash has some interesting things that they've done in their initial launch to try and create a diversified release of coins so that they have a variety of master nodes, they call them. When you have enough Dash to run a master node, then you can basically stake and get the transaction fees. I forget how much it requires, but it's a significant amount, probably close to $100,000 at this point.
So here's a basic question. I think a lot of people probably have is, how do you create a paper wallet, and why do you want one?
That's a great question. So the simplest way to create one is to go to one of the websites that allows you to create a paper wallet. There's some security concerns with that. Chances are you can run to the website and make your paper wallet, and there isn't going to be any real security issue. But it's the unknown there that creates the security concerns. So the best in practice way to do it would be to actually download the site and then run it offline in order to generate the wallet. Print it with a wired printer attached to your computer that doesn't have any wireless connection, and then probably figure out a way to try to clear the cache on the printer if you want to be super secure.
So the theory on the paper wallet is you really don't want to be on the network at all. You want to have your coins or tokens on the blockchain, but you don't want any evidence or any files on your computer, on a web server, on an exchange. You want to just pull everything off of anything connected to the internet so that someone can't access it. The only way they can access it is on the blockchain, and the only way they can access the blockchain is with the private key, which you keep in your paper wallet, separate from anything that's a computer, right?
Right. Yep. And one thing to bear in mind is that paper wallets introduce a whole level of physical security that you need to consider then.
Yeah. And the physical security means you don't want to lose or have that paper burn up, right? If it gets wet in a flood or if it gets in a fire, then there goes your private key unless you have a photographic memory.
Right. And there's certainly lots of opinions on this, but I'll say this is why I personally recommend people start with Coinbase. There's other ones out there too, but the idea is that you are trusting a third party with your tokens, but you're also getting the benefit of that third party being able to recover your tokens. Because keeping a paper wallet, no matter how secure you want to be, is actually keeping a single paper wallet is relatively ill-advised. The best way, if you want to keep cold storage, offline storage, Bitcoin, what you really want to do is create a 2 of 3 wallet scenario so that you have 3 private keys, 2 of which are required to sign a transaction for you to move your coin. And that allows you to put your 3 private keys in 3 separate places. So if somebody finds 1 private key, they don't have access to your funds. They would have to find 2 private keys. So it allows you to keep 1 private key on your private keys in your storage. It requires you to have 2 of your private keys in order to make a move. It gives you the opportunity to have a heads up, that if one of your private keys is compromised, you can then access the other 2 private keys, move your funds to a new wallet, 2 private keys, and know that your coins are secure.
So a couple of questions that I typed into the space here. Last one, well, we'll take the last one first maybe. Has anyone here heard of a blockchain implementation targeting the ski industry? I'm thinking proof of location providing the backbone to RFID ticket scanners.
That's a really awesome idea. Well, so actually, Smuggler's Notch uses what's called the Flake system, FLAIK, I believe, which they actually put on the kids and have GPS trackers for them when they're around the mountain. And Stowe, I know, uses an RFID for their passes. When you get on the lift, they've got the sensors. I don't believe that I don't know of any actually working on integration right now, but I have spoken with one of the developers on the team with Verify. And Verify is a location-based blockchain verification. So it's proof of location on the blockchain. So what they do is basically using multiple devices. So obviously it doesn't quite work perfect now, but essentially anywhere where you're around multiple devices that could have location data, it is able to essentially ping off of multiple devices to verify that you really are where you say you are, that you're not just spoofing your GPS. And it enables certain things like verifying identity. Say you're opening a bank account, the bank could then send a token to your location, and you would have to physically be in that location to pick up the token. And so that would verify that you actually have your home address. Also things like disaster recovery. If you need to send currency to a location that's available to any aid agency that's in that area is going to be able to open this up and access the currency so they can conduct transactions. So some interesting aspects that can be applied to. And I know GPS spoofing is a big concern that's being looked at, and I think blockchain is going to be an ultimate solution to that. There's a recent article somewhere, I don't know off the top of my head.
Another question, do you think Ripple can readily replace the SWIFT settlement network?
That's a good question. I don't know enough about Ripple to say yes or no per se. I've been into Gatecoin and looked at kind of the back end of how it functions. And from what I understand, Ripple is replacing SWIFT with some banks around the world.
Yeah, so I think JP Morgan Chase and Goldman Sachs are both on board with some Ripple projects.
Yeah.
For international settlements. The thing about Ripple to me is again, it seems to be it's not really an individual means of settlement between parties without disintermediated. Basically, you still now need to go to the banks to use the Ripple blockchain to do that. A couple of other things that
trusted intermediaries.
Yeah, a couple of other things about it is the company retained about half of the XRP coins that they issued for themselves. And so if it really rises in value, you have the same sort of questions we have about, Winklevoss twins and Satoshi Nakamoto, except on an even bigger scale. And finally, their business model did not actually require a blockchain or an XRP token to work. They were in business before Bitcoin came out in the blockchain technology. And they used the XRP coin to raise a lot of capital. And so those are just aspects of it that cause me to question the overall system and sustainability. But it may be here to stay because it's got the endorsement of major banks who are putting bets on it.
Mm-hmm. Yeah, Ripple's a California-based company. Like you said, they hold over half of their coins themselves. So Ripple is really almost nothing like any other cryptocurrencies. They're just a digital token issued on a blockchain that is maintained by a set of trusted intermediaries. And so if they all decide that their interests are more important than the people's, then 'tis the case.
So maybe we can start a little tradition for closing out these sessions. What's one coin to watch for the next week? What's one that you think might do something interesting?
Boy, it hasn't already. I gotta say, I've been watching Dash quite a bit. And on that note, Pivx is interesting to me because Pivx is a copy of Dash without the pre-mine, without some of the initial infrastructure in place. And I'm not sure if that's a good thing or a bad thing, but I'm curiously watching those.
Well, Dash has had a great run. It was probably about $265 in September, October, and took a an early lead up to 700, even before Ethereum and Litecoin. And this weekend, I think it's up over 1,200 or something like that.
Yeah,
Broke 1250 a couple days ago.
So it's had a great run. Is PIVX? I'm not familiar with PIVX. Is it following a similar path or?
Yeah. So no, PIVX is definitely on the lower end still, and PIVX is. Let me find it here. PIVX is trading at $6.70 right now. And has a total market cap.
And PIVX is PIVX. Is that its trading symbol?
Right, yeah, PIVX.
So, Ryan, if you want to switch to my screen, I could show people crypto market cap and how to
absolutely
kind of investigate these coins and what they can find out about them.
Yeah.
So Ryan mentioned PIVX. And oh wait, I have to share my screen. Sorry.
Oh, here's the other difference. Yeah, PIVX also has 55 million in circulation, whereas Dash only has 7 million in circulation. So I don't anticipate PIVX shooting through the roof, but I think it's a strong coin and it has a strong community around it.
So when you're on cryptomarketcap.com and you find a coin that you're interested in finding more information about, and I put PIVX, this screen. That'll bring you to this list where you can visit the website of whoever launched the coin. Look at the announcement when it first came out. But and you can also find blockchain explorers where you can explore transactions on the blockchains. We won't dive into those just yet. If it's an open source project on GitHub, you can go inspect the source code and download it, and you can run a node on your own computer and join the network that is running that coin. And you can also inspect the code for bugs, exploits, whatever, which is what a lot of these projects rely on to have integrity in their security and whatnot. But then down here you can look at price charts, and if you look at markets, click that markets tab, you can see all the different exchanges on which you can buy, sell, and trade this, and what you can exchange it for. So you can't, only on Livecoin can you do direct exchange for US dollars with PIVX. But if you have Bitcoin or some other of these, you can go to any one of these other exchanges to acquire it. And then there's other information you can download, historical data and whatnot. Roger, is there anything else you think I should show?
Yeah, sure. Show Neil. If I'm going to pick,
shows centralized markets.
What's that?
Just mentioning that what you're looking at there is only showing centralized markets typically. Or decentralized markets also, just so people know.
So if you want to show another one, Steve, I'd go to NEO. What used to be called Ant Shares. And that would be my pick this week for one to watch, because NEO is often referred to as the Chinese Ethereum. I'm not sure that's a fair characterization because I think it's in Hong Kong. It may not be strictly under Chinese control, which is kind of a good thing. But it kind of lags Ethereum and some of the other platforms because of the concern that Chinese authorities will try to regulate it or shut it down. But it has the potential, of rising as much or greater than Ethereum, and it didn't really get much play until very recently. You can see that recent spike where it kind of doubled. But I think it's got a lot of functionality that goes even beyond some of the other coins, and they've got a lot of interesting projects. So that's one I think to watch.
Yeah, so my pick is and it's not actually available to trade yet. It's in ICO currently. It's BLT is the symbol. Company is Bloom. It's out of Silicon Valley. It's trying to solve the credit rating, consumer credit rating problem. You know, right now we put all of our trust on TransUnion, Experian, and who are the guys that just lost all of my data and yours? Equifax. And you know, that's a seriously broken ecosystem, seriously broken business model for the rest of us. It's great for the principals in the companies. But anyway, it's a team of, you know, the brains behind Bloom is a team of Stanford, you know, digital identity researchers and crypto scientists. They've got, you know, good management from the Silicon Valley VC community. And I think they're really, you know, poised to make a dent in that space. And they've just recently announced a partnership with a blockchain lending company. I don't remember exactly what the name of them was. So they've already got a lender lined up to utilize their blockchain-based personal credit rating system that they're developing. So anyway, Bloom BLT is the one I'm watching. It will start trading on January 1st. Currently, you know, if you can develop the technical savvy, you can get in on it by buying it with Ethereum from your own wallet.
And FinTrucks is the lending partnership, a global peer-to-peer lending platform where borrowers, lenders, third-party guarantors, and specialized services to create a more optimal ecosystem, secure individual financing relationships. Now they need to pay us a sponsorship.
Well, this has been great. Should we wrap it up?
Yeah.
I had a lot of fun, so thanks for chatting. I think what we want to do is, continue to get interest from different people, get the questions. I love the format. It was fun.
Absolutely. Yeah.
Yeah, and by all means, anybody that received an email from us or is logged into the meetup page, you know, give us some feedback. Let us know what you'd like to see better next time, what you'd like us not to do. Whatever else. Let's do a continuous improvement paradigm here.
Absolutely. Awesome. Well, thank you all for being here, Roger and Stephen, and thanks for all our guests watching. We appreciate your interest in learning, and we look forward to continuing that adventure with you. Have a good day.
Thanks.